value from success, growth in discovery. Golden Arrow Resources is a well-funded gold-copper exploration company with proven management and prospective properties in Chile, Argentina, and Paraguay. Golden Arrow trades on the Toronto Venture Exchange, symbol GRG, on Frankfurt, symbol G6A, and the OTCQB, symbol GARWF. For more information, visit us at goldenarrowresources.com or call Sean at 778-686-0135.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk with you. We're in interesting times as always, it seems.
The stock market this year, before we went on air, you were saying, did we really have a bear market in March? Because the stock market sure hasn't acted like it.
Two things are making me wonder this. I mean, obviously we fell a lot, and CNBC defines a bear market as a 20% decline. So we had that. But I just read a book by John Kenneth Galbraith about past financial crashes and panics. And one comment he makes is that he's talking about 1929, 1987, and the South Sea bubble, all these different things. And one comment he makes is that after a crash, or we could say a bear market, people get very angry. And they'll often look for people to blame or cause for the crash that caused them to lose a lot of money. So we saw that in our careers in the markets in 2008. People got mad at the banks and got mad at mortgage-backed securities and all the leverage banks were using, all these loans people were using to buy houses, and this became a complete mess. And there are movies made about it. And in 2000, when the internet bubble and it started to implode, people blamed Wall Street analysts for hyping IPOs that weren't so hot and caused them to lose a lot of money. In fact, there are congressional hearings about this topic and a lot of anger. But here we had the stock market this year fall over 30% in March, and no one has gotten angry about it at all. And no one is looking for causes or people to blame or anything of that sort. In fact, we have seen the opposite. Instead of people being angry about the stock market, people have been excited about the stock market. We saw the rise of the Robinhood trader. This is the small investor in the United States with an account less than $1,500 getting into the markets for the very first time. There are millions of these people. And in a bear market, when they play out, you just don't see millions of people jump in for the very first time. It's the opposite. It's people are disgusted, people want to avoid it, and so forth. And it takes time for people to regain the confidence to get bullish again. So, for example, if we think of gold, it began the bear market in 2012 that ended in 2016, and at the end of that, it was hard to get anyone interested in mining stocks, and it took perhaps up to this year for more interest among the public to even begin. So that makes me wonder: can we really say we had a real bear market this year, or was this just a manic and very short correction, so to speak, something like what happened in October or the fall of 1998? The stock market fell 20%, but it wasn't really a bear market. The same thing also happened 2 years ago in the fall of 2018. The S&P 500 fell 20%. This time it just fell a little over 30%. Now, another thing, too, that is also a point of long-term concern for me is in March, when the market fell, I was saying on your show and elsewhere that I thought we were heading for a triple crisis. A pandemic crisis, an economic crisis because the economy would be awful, and then a financial crisis because we saw the corporate bond market explode and lock up during the March decline. We saw the Federal Reserve announce unlimited quantitative easing operations and so forth. And as things stand now, I think we can say the pandemic's still here. The economy is still bad. In fact, I saw a story this morning that said that in Dallas, Texas, they had the biggest line of people to buy food ever. It went on for miles, a food bread line. So that's just not that's a bad economy, no doubt about it. But as far as the financial crisis goes, most people now are going to say, well, the Fed took action. They solved it, and therefore everything's good. The stock market is good. The bond market went back up. We now got 3% rates on the LQD ETF. That's the yield, and everything is fine. So don't worry. But that makes me wonder to myself, well, if we didn't have really the financial crisis this March, then it can still come down the road. Not next month, not this year, but perhaps starting in the second half of next year, sometime in the future. I'm not trying to predict the moment, but when interest rates are near zero, and the LQD corporate bond ETF is yielding 3%, what is going to happen, I ask myself, when inflation does go up, or the dollar does go down even more than it already has this year? So I think these are potential problems that were not solved in the market, just patched over by Fed action that could rematerialize at some point in the future. So these are things that got my attention as we close out the last 6-7 weeks of this year.
We'll have more with Mike Swanson right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Mike Swanson. Mike, perhaps the reason people didn't panic in the stock market when it took its big dip in March is that people have learned perhaps how to play the market a bit better. You buy the dips, and what better time to buy when you have one of the biggest dips in years?
Well, the kind of statistics show that after the market bottomed in March, that's really when people started to do the buying, and especially individual investors. A lot of buying, in fact, in May. I think that was probably the month that saw the most buying. But I think one of the factors is that a lot of people weren't selling. Even though the market fell a lot, the individual investors weren't really selling on that decline because most people are doing what's called passive invest. They just have their money in ETFs, in mutual funds, and so forth, and don't really trade in and out. They may do periodic regular buying, like when they contribute to a 401k or something. So, but these people didn't really panic. Whereas in the past bear markets, a lot of people got out, after the market bottomed, for the next year or two. There's more selling than buying when it comes to individual investors. And, I can probably write down a dozen or so people that I know personally that got out of the market forever after it bottomed in 2009. But that obviously I don't think happened this April, except there is some evidence that suggests that older people that, are at retirement age or really above it, that they have done a lot of they did a lot of selling in the spring, but their selling was offset by the younger people jumping in, and a lot of the selling was that these older people supposedly did was to buy, they just moved it into bonds. So people aren't really getting out of the financial markets per se, unless they're buying gold or silver or getting into foreign markets. But we have seen nice rallies in gold and silver this year. There's no doubt about that. And some interest among small investors, but I think a lot of interest among institutional investors and so-called big money, if you want to call it that. So there has been some escape from the markets among some people. And then I must admit, I'm one of these people myself. I'm heavily weighted to gold in mining stocks, but I've also owned other commodities and stocks outside the United States, in fact, because I just have no interest in trying to get out the last, 5 or 10% of this move, when in the long term, I think the U.S. dollar is going to continue to go down. It already has this year. It's down just about 10% year to date.
We'll have more with Mike Swanson right after the break.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mike Swanson. Mike, if the U.S. dollar is going down, what currencies are hot and going up?
Well, a lot of them. And, one I own is the Swiss franc, and it's not necessarily going to go up the most, but one reason I own it is because historically, over 100 years, it's been the least volatile currency. It doesn't really swing up and down a whole lot, and it does go up when the dollar goes down. So I wanted to have a chunk of money in that as kind of my safety trade, whereas most Americans still buy treasury bonds as their safety trade. I'm buying things like the Swiss franc. But the two currencies that have gone up the most, and I think is really worth remarking on, is the Chinese yuan and the Japanese yen. And again, that makes you wonder, is this some sort of sign about the next decade where Asia is going to come out of this COVID situation in a better position than the United States is? They've handled it better. Japan has had very few deaths from it. Let me pull it up and I'll give you the exact number as we're speaking. They have had 1,800 deaths in the whole country, and it's a country of well over 100 million people in it. Compare that to what's going on in the United States, where we're heading for probably 400,000 or 350,000 over the next total, within by March. So, the Japanese have just handled it better, and so have the Chinese. But those currencies, they're doing very well, and they're not only doing well against the U.S. dollar, but against the S&P 500. And this is something really remarkable. So I can run what's called a correlation analysis, measuring how a stock or an ETF relates to another one, meaning that when one goes up, does the other go up? So, for example, if you take Newmont Mining and Franco-Nevada Gold. These are two mining stocks. And when one goes up, the other tends to go up too because they're both in the same sector. Well, when the S&P 500 goes up, the Dow tends to go up. And historically, what has acted as a safe haven when the U.S. stock market goes down has been Treasury bonds, TLT, the ETF for that, if people like to look at an ETF. However, this spring, that all of a sudden stopped happening. Both went down together for 6 weeks, which is a very something that's I don't think has ever even happened, or at least not since 1980 or so. At least not in the last 15 years. A very remarkable thing. Well, the only thing that has gone up consistently against the S&P 500 when it's gone down has been the yen and the yuan. In fact, when the S&P 500 goes down 1 week, they go up, and then when the S&P 500 goes down, they just kind of sit there. So that's a fascinating thing that is a trend in the markets right now.
China is one of the few predicted growers in economy next year around the world. Is it because they did a severe crackdown on COVID, made sure they cleared up the cases so they could get their factories opened up 100% again?
Yeah, I think that has a lot to do with it. And they also have been working with other countries to do trade deals. In fact, they just signed the biggest trade deal ever this week. Let me give you the name of it. The RCEP, biggest trade deal ever. 15 Asian countries, including China. The biggest global trading pack. It stands for Regional Comprehensive Economic Partnership. This news was announced Sunday night. Includes South Korea, Japan, Australia, New Zealand, Vietnam, and so forth. And also I would say that Vietnam and South Korea are also countries that have handled the situation with COVID very well and are coming out of it, are positioned to benefit, or turn around quicker, when next year, when it all starts to really fade away. So here's this country, or these 15 countries that are creating trade deals, and what has the United States done over the past couple of years but antagonize other countries, lower our trade with other countries, even close allies such as Canada. So we've been doing that, where our, emerging competitor is doing the opposite. So hopefully this is a situation that will change with Biden, but we're definitely a little bit behind the eight ball here, and it's going to be tough to get back on the top as the United States was a couple years ago. Will it be able to? I don't know.
What's the outlook for junior miners right now? Are people giving them due attention, or are they still bargains?
Well, there's some that have gone up dramatically this year. One I used to own, I don't own anymore. I bought it like in 2016 and sold it at least a year ago. It went up to $1.30 from nothing, 5 cents or something, several years ago. Then there's several like that. So there is interest in the sector that's growing. There's some that have gone up in valuation quite a bit, but there's many that are still very cheaply valued. And typically in a junior mining bull market, all of them will get to valuations of at least 25 million, and you can still find many with 10 million or less, a few in the $3 to $5 million range that are just kind of sitting there, not really doing anything yet. The companies are still kind of dormant a little bit. They're not doing active drilling. They're just kind of waiting, I guess. But there's a lot that are in the $10 million range when, let's say, 2 years ago, almost every single one was under that or around 5 million. So, I would say they've gone up, but the valuations are nowhere at, what's typically fully valued. And that full valuation level doesn't mean when you get to 25 million as the average market cap that it's the top and everything collapses. It instead tends to mean that the sector as a whole will go sideways for a couple of years, and it'll be harder to make money randomly in the stocks. You kind of have to be in the right ones or get a little lucky even. So there's still lots of opportunity in the sector, and frankly, I think it's holding up very well because gold really has been it's still in a consolidation since early August. Gold went up almost to 2,100, and recently has pulled back down to 1850. It's near 1850 as we speak. Around 1900, it's at 1886, like 30 points off support. So I think this is a good buying point for gold in the mining stocks. But what's interesting about these juniors is even though gold has been in this consolidation for several months, most of the junior mining stocks have really held up very well. They just pulled back a little bit, some of them not even pulling back at all. And that's really what you want to see as a sign that, yes, this really is a bull market. Because if you think back to 2016 or 2017, I think it was in July, August, when gold pulled back, they completely collapsed with it. So that's not happening now. So I think that shows this is a good positive time to buy when gold is on support.
Mike, thank you so much for chatting with us.
Thank you. Great talking with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. If you have any questions for Mike or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.